All right, bet. All right. So let me share my screen. Let's go to Forex. Let's look at some charts. Right now, what is it that we're using? We're using this one. All right. So risk management, simple, guys. It's not difficult at all. Like, it's all about doing math. That's what we're going to talk about today. We're going to talk about. Is people waiting to get in? No. It's practically super simple, guys. So for example, let's look at the entry we took today, right? That we took the US 30. We took this US 30 sell. It was beautiful, like that. It might continue to drop all the way, to be honest. It might just start liquidating. But I think we took it around this wick. That was the wick. Let me see. No, we took it right here. Yeah, right here. This was the entry. Right here. Was that the entry? Yeah, that was the entry. All right. So how you gonna determine how much you're gonna risk here, right? Like, let's say we have we'll do different examples. We'll do like a $10,000 account, right? We'll do like a 10K, and we'll start with that one. So for example, this entry right here. Let's say you wanted to go in for the sale, right? Like right here. Like you saw that huge wick, you saw it come back, like you saw the entry, right? Like you saw the sniper entry. Like this is a beautiful entry right there. Because there's something called the purge. Like this was a purge right here. It took out the highs, then it dropped, and that would have been your sniper entry. So it's like the 1-2-3 strategy, the one I always talk about. Right, like the easiest moves to see. And you got the 2 right there. So you got the equal highs. Equal highs get taken out by the purge. Boom, he purges those highs. Then he drops dramatically, right? Like it was crazy. It went from 136 pips, right, up, and then he dropped like instantly. He dropped 153 pips, right, or points, because we're in US 30. But then you would have had a chance to get in it, right here. That would have been the sniper entry, which I think I believe that's the one I took. I believe that's the one I took right there, right? So you went into profit right away, but let's say you want to risk. We have a 20, maybe even up to here. Let's say you want to put your stop loss all the way up here. You could even do that, but that's way too much. That's 292 points. So normally you want to risk like tops, like 25 points, you know? You want to risk like 25, right? So let's say you got in the sale right here, and you stop loss, you were going to do 30, right? Let's do 30. Let's do 30, all right? So what's the math? Now it's all about the math, right? Like let me bring out the calculator. It's simple math at the end of the day. Simple math. Like, I'm gonna show you guys how we do it. If you guys got any questions, let me know. I'm always here. It's an open call. Like, we can talk about whatever you guys want. I got you guys. So we have a $10,000 account, right? So we know. So the rule is, this is the rule. This is the rule. We're going to talk about trading plan as well too. We're going to talk about trading plan. We're going to talk about risk management, and we're going to talk about like sniper entries. That's cool too. So if you have a $10,000 account, the rule is you could only risk. Well, my suggestion for you guys, right? Especially with these funding challenges, you got to keep the risk to the minimum. So let's do a 0.5. Right? No, it's 0.05, my bad. So erase this again. 10,000 times 0.05. So that's like half a percent. Is that 0.5%? Let me see. No, it's not 0.5%. 10,000 times 0.005. That's 0.5%. Yeah. So $50. right? That's how much you're gonna risk per trade, 50 bucks. So now you know that you have 30 pips, right? So if 30, you're gonna risk 30 pips or even 40. You could even do 40 pips, right? 40 pips. No, that's too much. Let's do 30 pips to play it safe. 30 pips or 30 points because we're in US 30. So you go back to your calculator. And what you're gonna do, you're gonna divide your risk by the amount of pips. Simple. So we said 30 pips, right? 30 pips. So we're talking about $1 and six. That's crazy. $1 and 66 cents. $1.66 per pip. So what does that mean? How much are you gonna drop here, right? So if you have a 10K account, right? If you have a 10K account, and you know your risk is 50 bucks, right? 50 bucks. Now you know it's 1.6, right? Like one after you do the division. So you go $10,000, you're gonna divide by 30 pips. Is that what we established? 30 pips. So you're gonna put 1.6, right? $1.6. That's how much you're gonna put per pip, which means you're gonna put a 0.6. No, my bad. A 0.16, right? Because that's how much you're gonna risk in this trade. Oh, it seems like a small amount, right? It seems like a small amount, right? But that's proper risk management. That's how much you want to drop here. You know, that's exactly how much you want to drop here. $1 and a 0.16, right? Because what happens if let's say you drop a standard. Let's say you drop the standard. What will happen if it wouldn't have gone the right direction, right? Like you're taking a bigger risk now. If you drop a standard, now instead of losing $50, right? Instead of losing $50, a standard, you're gonna lose on a 30 pip stop loss, you're gonna lose $300, right? Am I doing the math correctly? I guess so. So if you drop a standard, because it's $10 per pip, right? If you take a L, right now it's a $10,000 account. That means you lost 3% of your account in one trade, right? That's way too much, guys. Like that's way too much. If you guys want to risk standards, you gotta put a smaller stop loss, right? You gotta like match the stop loss with the 50, right? So if you know you're gonna risk 50 bucks, that means if you're gonna drop a standard, you can only put a 5 pip. Like it gotta be a sniper entry, right? You gotta be a sniper entry. Like literally, you cannot even go and draw down. Like literally, you're gonna have to like get in here and like literally look at it. You gotta look at it, right? At that point, your finger is your stop loss, right? If you see it go past 50 bucks, close it out. Close it out. Don't wait. Just close it. You gotta train your mind. You gotta train your mind to take those L's. You have to take those L's. It's normal. It's part of the game. You gotta take L's. Like you guys could see, I got a perfect example like this whole week, right? Like my first phase 1 challenge, I passed it by myself, right? I passed it on my own. I went to war. I went to war on that challenge and I learned a lot, right? But if you guys could see here, like on this week, right? My first week with the 10K live, right? Look, I'm automatic. Like I dropped a dollar and I saw it go to 52. I closed it. I don't care. I closed it. You have to be automatic. You have to close it. Like look at these losses, 40, 32. But look how many losses I accumulated. I accumulated 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 L's, bro. 15 L's, right? 15 L's. But then I had some good wins, right? Like then I came back. I was in drawdown the first 3 days with my life. I was in drawdown like -2. I was almost at 9,700, right? I was like at 9,700, like almost 650. And then I started like on Thursday and Friday, I hit my daily goal. My target for the day is $100, guys. That's the other rule that I want to talk about. So now you know the rule in regards to risk management, how much you're gonna risk, right? You're gonna risk 50 bucks, 0.5% or less. Like you see that? 0.5% or less. Like let's go back over here. 0.5% or less. You know? Like keep those L's to the minimum, because you're gonna take some L's. Look right here, I dropped at 1.55, but I didn't see it go my way. I closed it, right? Like that's good risk management. Even though I'm dropping a standard and a half, I didn't see it go my way. I closed it. Why am I gonna hold it? Like why risk more? Like right here, I dropped the standard as well, but it went negative 20 bucks. I closed it. Why risk more? Then I dropped a 0.25 here, minus 25 bucks. You know, you could live with these losses. These are not gonna blow your account. At the end of the day, if you practice good risk management, you're gonna save your account 100% of the time, right? Because once you get those good trades, maybe we have a good trader right now in the squad, Williams, right? Like he's gonna start like helping us out. You know, he's gonna start like looking out for us. He's gonna start dropping signals for us and stuff, so we could start building our accounts up. But look at him, like he's a beast. He dropped on the 300K. He dropped 5 lots here. He caught 2,500 bucks, right? Then he did this one too. Like the guy is incredible, but like barely any drawdown as well. Like he's just sniper entries, yo. It's incredible to watch him trade. But so let's talk about also. So now you guys know how much you're gonna lose per trade, right? So we're gonna. This is the rule. This is a rule, guys. Like it is a rule. Like there's no way around it. There's no way around this. You have to apply this rule. Like rule number 1, only lose max 0.5% per trade, max. And if it's less, even better, right? A 0.5%. And let's say you started revenge trading, right? Let's say you went into a downward spiral, which happens. You took a L, now your psychological is all messed up, and you're like, yo, I gotta make this money back. All right, fine. You went back in the market after you took your L for the day. So if you're gonna revenge trade, yo, the max you could lose per day, 1%, 1% max. And I don't suggest even losing 1%. If you lost 0.5% for the day, go chill, go relax, go unwind because your psyche is already messed up. You know, I mean, this is a $10,000 account. Remember, we're just working over 10K right now. So max $100 per day. If you lose $100 per day, you're done trading. That's the rule. It's a rule. This is rule number 1. How to like control your losses. That's rule number 1. You gotta control your L's. Like rule number 1, only lose what we spoke about. We're gonna lose max 0.5 to 1%. Like that's it. And okay, any questions regarding the rule and how much we're gonna lose per day? Who we got in the call? Armando, welcome to the call. Samuel, iPhone, welcome. You guys got a lot of iPhones. Vita, welcome to the call. Perfect. All right. So let's continue talking about our trading plan. So now we know, like rule number 1, that's how much we're going to lose, right? And this is the next rule. Rule number 2. Rule number 2. Rule number 2. We're going to go for between 0.5% to 1% per day, right? That should be like your rule number 2. And I didn't make this up, guys. I didn't come up with this theory. This was actually taught to me by millionaire traders, right? This was taught to me because I'm always getting involved in Zoom calls. I'm always putting in work. I'm part of like 10 different mentorships. I'm always like listening and learning more because this is something that I had a big issue with. I wanted to go around it, and you can't go around this. You have to do the math. Every time you go around this, bad things are going to happen. You're going to blow your account. You're going to go into revenge trading patterns. Your psyche is going to be all messed up, right? So rule number 2, 0.5% to 1%, right? So let's look at this trade today, right? So I took this trade today. Not this one. Right? So look at this. All right, so I saw US 30 hit my daily target, which is, and I thought it was going to come back on me. You know, I secured some profits. At least I got my 0.5% for the day. I'm not going to lose. If you have your 0.5% for the day, secure it. Secure your 0.5%. Watch it. If it's continuing to drop, that's cool, right? You watch it. But if you see it like coming back and it's going like you have a feeling it's gonna come back to touch the top again, yo, just get your 0.5% and let the rest ride, right? So I took my 0.5% right here, boom, because I thought it was gonna come back on me. I saw because I think I caught it over here. I caught it somewhere here. Then I saw this. Then I saw it come back. Where did we catch it exactly? 32,190. 32,190. 32. Wow, we caught it. What the fuck? Oh, we're looking at NAS. Never mind. This is not US 30. But they're practically moved the same. It doesn't matter. So let's go to US 30 real quick. No wonder you look weird. Okay, now that makes sense. This is what makes sense right here. So it made the same move, guys. Same move. The purge, right? It was consolidating. Consolidating. Then you got the manipulation to the top. And then you got the distribution. Right? So the power of three, boom, boom. And it's also like power of three, and it's also called the purge strategy, right? So you have your equal high right here, right? Then the equal highs. What is the purge? I'm gonna explain it to you right now. So the purge, right? So you got your equal highs. It's forming equal highs. So it's forming liquidity, right? It's forming liquidity. Boom, boom, boom. Consolidation. The reason they're doing this is because they're gathering contracts. They're gathering contracts. Everybody's like, oh, it's gonna sell, it's gonna buy, it's gonna sell, it's gonna buy, it's gonna sell, it's gonna buy. And what they're doing, they're just gathering contracts, right? And then they give you like an impulse to the top, right? So retail traders, they see this and they're like, oh, it broke the consolidation. It's a buy. So everybody starts buying. What they don't know is that the banks or the people, the hedge funds and the people in charge of these algorithms, right? They're going to trick you. They're going to trick you into buying the sell, right? They're going to trick you into buying the sell. So equal highs get taken out. Boom. That's the purge right there. Number two is the purge. Number one is the equal highs, right? So then after the highs get taken out, look what happened. It dropped immediately. Boom. It dropped immediately. So most likely, if you're like a retail trader and you see this, you're like, oh, it's back at entry. Let me go in for another buy, right? Let me go in for another buy. But this is actually the sniper entry you want to get in. You want to get in here. This is where you want to get in. After you see that equal highs get taken out, you get, boom, the purge, right? The purge or whatever you want to call it. I'm gonna drop the video for you guys where I learned this strategy as well. This is actually taught from ICT. ICT teaches this. ICT, he's one of the guys we actually like follow, and we try to learn as much as we can from him. So this will be your sniper entry. So you see the equal high get taken out, it drops, it comes back, it fills the gap. Look, it fills this gap over here. There's a gap right there, right? So that's your fair value gap right there. It filled it, boom, filled the gap, and it dropped immediately. So if that would have been this would have been a sniper entry, guys. That would have been a small risk, right? You would have got in at the gap. You would have put your stop loss somewhere here, right? So it's a 65 pips, you know. So you gotta watch your risk management, right? So if you want to risk it for the biscuit and drop a standard, that's fine. Drop a standard. But what's the rule? Like if you see it go negative 50, max 100, max 100. That's too much. That's too much. You want to risk $50 or more. Like that's like right here. You want to keep those L's small, 0.5% or less. 0.5% or less. You see small, I'm doing big risk on some of them, but small loss. You know, big risk, small loss. That's cool. We could live with that. So let's go back to US 30. Let's look at this real quick. So right there. So you see, this is called a shooting star, right? You got the shooting star or the OG. It's more like a DOG. Yeah, I also want you guys to study that too. I need you guys to study the candle sheet. You go to Google, go to candlestick. I need you guys to study this as well. I got some printed in my walls over here in my room. Like they're right there, but I need you guys to study these things. If you guys really want to become independent traders, you need to learn your candles. You got to learn your candles. So for example, let's look at this right here. Let's see if it loads. The ultimate candle pattern cheat sheet. All right. So the OGs are neutral candles. So that was like a bullish spinning top to me. Let me see. Let's see. It looks like this, like a gravestone DOG. Look at it right there. Yep, that's a gravestone DOG. So now you're seeing like a reversal candle, right? Like it's giving you like a reversal candle. So that's when you want to go in for the trade. You don't want to go in here like when you see like bullish momentum, like white, then you start seeing wicks. So you see that wick, and if you go to your candlestick patterns, right? Like look at this one. Like it could be like a shooting star, it could be like a gravestone DOG, bearish spinning top. I think it's more this one, the bearish spinning top. It looks just like that one. Look at it. Boom. So right there, you would have gotten in this trade. You were in drawdown 14, 16 pips, 17, 20 tops, and then it started dropping. He came back one more time. That would have been another entry right there because it filled the gap. Right there is a little gap. It filled that gap, then it dropped again. Then it came back, a double top, and you would have been riding this whole wave all the way down. We're talking about 419 pips, right? But personally, I could have rode it the whole way with my full, but I follow my rules. I follow my rules, which one are my rules? If I see a 0.5%, like that's my target for the day, I'm gonna secure the bag. I don't care. Like that's the rule. You gotta program yourself to follow these rules. Like you have to program yourself. You have to program it yourself. So I took my 0.5% and I left I think it was like a 0.1 running. And then that 0.1 kept going. Boom. So I made another 29 bucks. So I hit my target for the day. My target for the day was 100 bucks. I hit my target for the day. I'm happy because if you have 1% days every day, that means 5% a week, 5% a week, right? But then you're gonna have some bad days. So you're losing 0.5% in some days, max 100, but you always want to keep those wins high, right? So in 2 days, I covered like a lot of the losses. In 2 days, all these losses, they got covered on Thursday and Friday. Thursday and Friday, I caught some good trades. Boom, 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 and they got covered. I'm down 113 bucks. That's not bad at all. That's not bad at all. Like I know I'm gonna make it back. I know I'm gonna make it back as long as I keep practicing good risk management. So you guys understand the rules? Any questions? You guys want me to talk to me? Go ahead. You guys good? All right. So let's see. Good stuff, man. I'm glad you like it. So what else can I tell you guys about your trading plan, right? This is pretty simple. It's just 2 rules, guys. That's your trading plan. Keep it simple. You want to like really pack down your trading plan. There's really nothing else to it. Like that's it. Just keep it simple. Max you could lose is 0.5% to 1% tops a day. And the rule is, what's the rule? If you lose 0.5%, you're done trading for the day. You're done trading for the day. I don't want you guys to even look at the charts anymore. Like you're done. You gotta stick to those rules. You're done for that day. The next day you come back, you catch a good trade. You made up your 0.5% plus more. That's what it's all about. You gotta become like a robot. You gotta become a robot mentally. At the end of the day, which one's the only skill set that you need? The only skill set you need is your finger. That's the only skill set you need. You just need to press a button, click. That's the only skill set you need. But why is it that it takes so much energy to just press that button, right? Like, okay, close out. Boom. That's simple. Yeah, you just press that button. But what happens is your brain is just going through it. Your brain is telling you, no, it's gonna keep going, it's gonna keep going. No, it might come back, it might come back. Like your brain is trying to trick you. But if you stick to your rules and you catch your daily profit, that's the only way you're gonna be able to beat your brain, because your brain is gonna trick you. Remember, we're emotional creatures, and especially dealing with money. Money drives people crazy, right? Because people get greedy, people they want more, but they just want to get rich quick. Like, yo, I just want to catch this trade and make $1 million. It's unrealistic. It's unrealistic, guys. You guys gotta think about Forex long term. Forex is long term, bro. It's a long term game. I've been trading almost 4 years now, and I'm still learning. I'm still developing my skill set. I didn't pack down this whole concept into this year. Into this year, I started like understanding what risk management really was. I knew about ICT, I knew about fair value gaps, I knew about order blocks, I knew all this cool stuff, all these things that they teach, but I wanted to just go around it. I wanted to go around it. I just wanted to catch a big bag. I wanted to drop 10 standards on a $3,000 account. What happened to when I dropped 10 standards on my $3,000 account? It got blown. It got blown. You know how many accounts I have blown, guys? Like trying to go around this rule. You cannot go around this rule. Like you have to apply these rules to your daily trading habits. Because at the end of the day, you're building new habits, right? So if you start from the gate, practicing good risk management and applying these rules every single day, I guarantee that it doesn't matter. Like you could be you could have like a 60% ratio win rate, like 55. You're still gonna be positive, right? Like eventually you're gonna be better. You're gonna get better. You're gonna get better. You're gonna get better. But you're still gonna be positive, like because you're applying the rules of risk management. And that's basically all I wanted to touch on, guys. Risk management and the trading plan and a little bit about the purge strategy. Like the purge strategies are actually really cool. I'll drop some videos for you guys in the chat. You guys got any questions? Who we got in the call? We got Williams. Oh man, we got my boy Williams in the call. What up, Williams?
Yeah, I'm just enjoying the conversation. Thanks, buddy. Well done.
Thank you,
Well
bro.
done.
Thank you, bro. I appreciate everything you're doing for the team, man. Thank you so much.
Welcome.
Do you want to drop any knowledge for us regarding like risk management?
Yeah, you've said it all, really.
That's that.
You
Is
need
that
to
Go ahead.
you need to be able to capture and conceptualize how much you want to lose before you touch the keyboard or your phone to enter the trade. So you must factor in how much am I willing to lose. 0.5% best practice per trade, maximum 1%. So you got the rules, man. You got it.
That's the rule, right? That's the rule.
That's the rule.
Yeah.
So I took a trade yesterday. I did in the 2 days I did. If you check those trades, you know, you must calculate. You must be able to either you have a pip calculator or you have a calculator on your phone or on your system to calculate if the account is $10,000 account. You must calculate how much is 0.5% of $10,000 account. All right. So when you get that figure in dollars, you must say to yourself, how many pips is that? All right. That will be your stop loss if you really want to go far. So if you begin to jump in on a trade without having that as a rule, somehow, somewhere, it will become a bad habit while trading. So it's important. So you've said it already. So what I do is, no matter how tempting the trade is, no matter if the trade has started moving, I make sure I calculate. I know, okay, what am I willing to lose? But the second flip of it is this. There are trades that you will take And sadly, those trades have gone. All right. So structurally, like you were showing us, you can see those reversal candles. Those things that's a sauce. That's a sweet sauce that you just shared with us. The shooting star, if I'm correct, or the doji. When you have those candles, that's a good place to enter your trade. Then you factor in your risk that you are ready to lose, your risk percent. Now, the problem many people have, even with the risk percent, is this. They enter the trade when the trade is already midway. Are you with me? And place their stop loss at the 0.5%. When a trade has gone midway, what the algos sometimes do, sometimes the algos enjoy going back to origin, going back to where that trade started from. So if you don't enter at the right entry and the trade has gone and you placed your loss, your stop loss above that trade, most of the time you will discover that if you are not careful and if you are not lucky, the algo will go back to the entry point on structure to just possibly retest that entry point, and it will take off your stop loss. You will lose that trade. Not that you were not right on the trade, but because you did not enter at the right time. So what I'm trying to say is the second thing I would like to emphasize is timing. And timing is two. One, timing has to do with entry point. Because if Mike enters his trades just below the shooting star and Williams enters his trade midway when the trade has gone, Mike stands a chance of winning that trade, while Williams stands a chance of not winning the trade. So point one on time. So your time of entry, your timing is key. Point two on time is this. If you really want to reduce your number of trades, if you really want to get trades that are snipers, you would need to note time of day. That's what ICT calls kill zones. All right. You will need to note time of day, time where liquidity is at premium, time where you know the market is fully active. All right. So except you are scalping, of course, we have people who are good on the 1 minute time frame and they can scalp any time of the day. But if you want to get those kind of trades that will give you $5,000 profit, $4,000 profit, trades that will give you, so to speak, all you are looking for, especially on challenges, I've discovered that no matter how good a scalper you are while trading a challenge, because scalping at the wrong time of the day, you would need a wider stop loss on each of those trades. And by the time you lose a number of them, it will hit your DD. Can I put it to us that all of us are good traders? Because those company challenges are telling us that we should do 5% daily drawdown per day. And to be honest with you, you can actually lose 5% on 100K and you are still a good trader, right? So because you are managing $95,000 left. If it was your personal money, there's a tendency that even if you lose that 5%, when you come back the next day, you may even gain more than that. But because the companies are making money off us and they know that realistically, not many people will be able to manage 5% drawdown. And not because they are not good, but because the psychology is going to play out on many of us. So they are working and earning on our psychology, on the effect of the human brain, like Mike just shared. So what I'm trying to say is this. I don't look for all trades. All opportunities are not mine. I'm not looking for profits. I'm not just trading to meet up with the targets. I'm not just anxious to enter every trade. All trades will give money, I agree. But there are some entries that we call high probability trades, high probability entries that will give you peace of mind when the trade is running, entries that will give you good profit, all right? Entries that are sniper. And to be honest with you, if you get those kind of trades, there are trades that you must enter at the proper time of the day. And when I'm talking of proper time of the day, I'm talking about kill zone, significant time. Even within the kill zones, there's a time to enter that trade. So Mike, if you watched my trading in 2 days, thank God you've been monitoring my trading, you will discover that there's a time I enter the trades. I don't enter any kind of time. All right. Personally, if you are trading Asia, all right, there's a time in Asia you must enter. If you are trading London, there's a time in London that you must take that trade. Because the same way the trade is gone is the same way the time zone is gone. The same way the time has gone within the time zone. I don't know if you understand what I'm saying. So for instance, if New York session starts at possibly 1:30, all right, you should be doing an entry between 1:30 and maximally 3 p.m. Okay, sorry, I'm using my time zone. So if New York session starts at 8:30 your time, all right, you should have entered that trade between 8:30 and 10 a.m. Because, of course, there are entries we would enter at after 10 a.m., you know, but for me, except you are scalping. But if you want to do significant figures, honestly, there's a time to enter. Because as the time zone is graduating towards the afternoon time and towards the close of day, so also the trade should be graduating, should be, you know, accelerating, all right, should be vibrating. So the moment you enter at those times, at the right time, you would make money. The third thing on time of day, sorry, I'm just so much emphasizing on timing because all of us here, we are good traders, except those that are just learning or just started. But the problem with many of us is not the skill. Sometimes we are fighting against time. And the law of nature is that time will always test skill. Time will always test things. You understand? Things will always pass through the test of time. And the moment you miss timing, you would pay dearly. So timing in terms of entry, timing in terms of time of day. And the third thing on timing again is the day of the week. And this is the source. Many of us don't realize that the day of the week you are trading should determine how much volume of your capital you should be risking. There are days and there are days. So for instance, Monday is a confusion day. Note it. So if you are trading on Monday, you cannot be doing the kind of volume of your capital that you will be doing on Wednesday. Because there's what ICT taught us, which has to do with what we call weekly profile. All right. You must understand that Sundays, the market is just opening. Not everybody is in the market on a Sunday. The banks are here to open. So the liquidity Sunday night is different from the kind of liquidity you will get on a Wednesday. So if I am trading on a Sunday night, I would not be risking as much as I would risk on a Wednesday because I know that there's what we call volume. All right. The volume of transactions cannot be the same as a Wednesday. It's just like a normal, your place of work, except you are doing an informal or you're in the informal sector. Possibly you are working in a barbing salon or you are a sport or you are an athlete. All right. But most formal organizations, they resume work on Monday. All right. All the banks resume on Monday. So you can't be taking 30 lots or 10 lots on a Sunday night. You'll be foolish because liquidity is low. Then on Monday, I still call it a confusion day because people are just coming into the market. Asians, for instance, every Friday, Asians take out their money from the market, from the Forex market, and they move that same money to the crypto or to the synthetic market. So the volume drops by Friday afternoon. The Asians are taking their money, and because they are 12 hours ahead of you in the US, you must factor in that Fridays are also risky days because for you in the US, your morning time is their night time. So they've taken their money out. So on Friday, you are not having full volume. On Monday, the same thing. So if I'm trading on Monday and on Friday, I'm careful. I don't like trading, especially on Mondays and on Fridays. If I'm going to take a trade, I don't enter in the way I would have wanted to enter on a Tuesday, Wednesday, and Thursday. So what am I trying to say? Time of day, time of the week, time of entry. So during the week, I'm careful on Mondays. Sorry, I'm more careful on Mondays and Fridays because I know liquidity is not at premium. It's not at par. Then on Tuesday, Wednesday, and Thursday, that's the bomb. Why? Generally speaking, again, if you look at it, no one says, thank God it's Monday. Everybody is saying, thank God it's Friday. So Monday, everybody is slouchy. Monday, everybody is still trying to have meetings on how much they are going to be moving into the market. Mondays, the Fed, the banks are all just resuming. Everybody is slouchy. Tuesday, everybody is saying, oh, I need to achieve during the week. Wednesday, execution day. Thursday, continuous momentum day. Friday, withdrawal days. Monday, confusion days. Tuesday, that's when you should be looking at the charts critically. What is this week saying? Because most times you would discover that on Tuesday, the Judas swing of the week would have been fulfilled. Tuesday or early Wednesday, all right? The Judas swing for that week would have happened on that week. Then the trade will now start going where the weekly direction wants that trade to go. Did I make sense? I don't know if I'm communicating. Are you guys still there?
Yeah, I'm listening. So basically you're saying like you wanna figure out what like what's the low of the week, what's the high of the week. Like you want to know where you're gonna buy at a discount, where you're gonna sell at a premium, stuff like that, right?
Yes. So when you understand your timing, sincerely speaking, to be honest with you, you have mastered, sincerely yours, at least 30% of what is needed. Timing is so key. All right. 2, you master your risk and psychology. That's another, sincerely yours, that's 50%. All your entry strategies, all your order blocks, all your techniques, all your supply and demand, all your wyckoff, all your candlestick anatomy, all your whatever you're doing as your strategy is only 20%. Because, and can I put it to you, this issue of timing, not many traders know that. So ICT tried putting it into a package and called it kill zone. You're right. You have your New York kill zone, you have your London kill zone, you have your London close, you have your Asian, kill zone and all that. But to be honest with you, if you are not paying attention to time, it is time to start paying attention to timing. All right. So you emphasize risk, which is beautiful because that's 50% risk and psychology. When you also lose, and another thing we have is revenge trading, because when you lose, that's part of the psychology. Psychology is exercising. I used to trade I have a resort center here in Nigeria that I co-own with someone else. All right. I think I've told you before, Mike.
Yes, sir.
So what happens with me? I trade in an office and I have a swimming pool, all right, in my resort. So usually before New York session starts, I jump into the pool for like 30 minutes. I have a gym. I go into the gym, all right? Or, I take a walk in the mornings. Why? Because you need to exercise. A trader that is not exercising is going to have a problem. It's not. So all of that has to do with your psychology, your risk, your psychology. Because if you don't have the right frame of mind, you understand me, and you jump into a trade, you're going to lose. Because there are natural laws that just happen. It's a natural law. Your body itself is like a PC. You have a central processing unit in your brain. Your brain is like the CPU of your body, and your brain understands all of this. And money itself is a spirit. So everything is in nature. I don't know how to say it now, revolving around each other. If you break one, it affects everything. All right. So for instance, Mike, you saw the trades in 3 days, Wednesday to Friday. Wednesday, profit. Thursday, profit. Friday loss. What happened on Friday? Mike, if you are sensitive, sorry to say this publicly, when we were going into Friday, all of us had a kind of negative energy. Did you notice?
Yeah.
There was a negative energy on Thursday.
Yeah.
And on Friday, we didn't make as much as we made on Wednesday and on Thursday. Can you see the flow? Because everything revolves around each other. I can put it to you, the guy that messed up on the group, as much as he had made money before, give him the next 2 to 3 weeks. He's going to struggle because negative energy is a law. The moment it gets in, it's like a virus. It's like HIV. So no matter how good you are, those things play out. The brain has captured pride. The brain has captured greed. And the law of nature is saying that the moment there's negative energy of pride or greed, no matter how good you are, it's going to affect you. It's going to affect you somehow, somewhere. You cheat someone else and you want to be profitable in the market, it can never happen. I'm telling you, no matter how good you are. So you must be able to show love. You must be able to, that's why some traders don't even like relating with people. You understand? Some of them just want to isolate. They just want to close up. In short, some of the good traders we have, some of them may not even have, some of them may even be addicted to things like weed and things like that, just to vibrate, to have this kind of physical energy. All right. But the truth is, the moment you begin to fight maybe your spouse, so you need to take care of that as well, because it has a way of rubbing off on your trades. It may look like this guy is speaking spiritual things right now.
Bro, you're speaking
but I'm
facts.
telling you the truth.
You're speaking facts.
To be honest with you, negative energy has a whole lot to. Mike, I've known you for some time now, at least more than 6 months.
Right.
We've never had a disagreement. All right.
Mm-hmm.
Yesterday was the first time I recorded a loss in July. I'm not joking. All the trades I've taken in July. Yesterday was my first loss. All right. So what did I do? You noticed I told you I had to go to the group to read those charts you also had with God Z. All right. This was the real issue. That is why I went to read it, because I know anybody that brings negative energy into the squad, we are going to lose. So either we take him out, we quarantine him so that we can continue to synergize, all right, and the energy level can come up again. So when you said you are cutting that relationship yesterday, I was excited. I was not excited because I want to make an enemy. No. I was not excited because things went bad. No. I was only excited for the trades, because the trades knows when you are not in a good mood. The trade captures negative energy. Because money is money. You think money just exists? There are principalities, there are powers, all right? There's a force, okay, that recognizes money as a critical role in the economy of the earth, all right? And the moment you begin to do things that breaks the laws of nature that the earth has put in it, that's in place in the earth, everything begins to respond against you. Let's leave that. Mike, I know you know what I'm saying, so you can elaborate maybe later on. You get the gist.
So it's hitting me. I didn't think
traders,
about it. I didn't think about it this deep, dude. I hadn't had to take the time, but dude, now that I think about it, you're like, bro, you're on point on the whole conversation. Wow.
Not just Mike, all of us should go back and think. Check it out. When you lose a trade, meditate. What went wrong? If nothing was wrong with your skill, what went wrong with your psychology? What went wrong with your relationships? It has a way of affecting what you're doing on the system. That's the much I would want to say at this point. Thank you.
Amazing, amazing. Thank you for that. So to conclude, your mindset will be a reflection in the trading.
Exactly.
Like whatever, like for example, I had a bad experience one day. I got into a fight with my baby mama, and I came to the game. I came to the trade, trying to trade with anger. I blew my account that day, and it was an account that I had grown for the past month. I was actually in profit. but I blew it in one day because I came into the market, like you said, with negative energy, trying to like, like I took it out of the market. So basically what you're saying, if you're like going through some tough times, you're going through like an emotional breakdown, you got into a fight, there was arguments, stuff like that, don't trade. Like don't even trade, don't even look at the charts. Prepare yourself mentally. Like you gotta come to the trading game with a, like you said, with peaceful mind, with like a peaceful mind, high vibrational, full of confidence, like with God. I think I pray a lot, bro. I pray a lot, and I always pray for like guidance. God, you got me. Like with that faith and that belief, that confidence. I think that helps a lot too.
Yeah.
Appreciate you, Williams.
Thank you.
You guys got any questions regarding we talked about mindset, we talked about psychology, which is important. We talked about the rules of engagement. We talked about the strategy, about wigs, about like candlesticks. Is there anything else you guys want to talk about or anything that you guys having issues with? Just let us know. I know somebody asked a question earlier. I don't know the answer for that one. Like somebody asked, what is the best time to trade in the month? Like, I don't even know that part. Like that one's tough. I never thought about
Yeah,
it.
there's a time to trade in the month. Yes, there is.
There is? Okay.
Yeah. Usually NFP sets the tone for the month. So you wait, usually you need to understand the first week, the second week, the third week, and the last week of the month. All right. You need to understand that. So the instrument you are trading or the Forex market itself settles at the middle of the month. The same way you have your week, beginning of the week, the same way I spoke about Mondays and Fridays, the same way it also plays out during the month. So the market makers, they already have, because some of these things are, so to speak, and there's a price level the big players want price to go. Fed, Bank of England, Bank of Japan, Canada, Bank of Canada, they all have where they want price to go. The Reserve Bank of Australia, the Reserve Bank of New Zealand, all right? So the market at the beginning of the month is volatile. The last day of the month is also volatile. So from the last 2 days of the month up to NFP, the market is volatile. So for your level of trading, depending on your level, if you are not so used to the market, I usually advise stay out. All right. But for those of us that have been trading for a while, I'm sure no matter how volatile a market is, you know what you are looking for. So it shouldn't scare you. You know the kind of candle pattern you are looking for, you know the time of day, you know the kind of things you are looking for. So there's no scarecrow. You can trade. But if you are still an average trader, that's the time you shouldn't be trading. It's volatile. But the moment NFP is called non-farm period, usually happens first Friday of the month at 8:30 New York time. So the moment NFP kicks off that month and the market settles after that day, the month, so to speak, resumes. All right. So the best time for me during the month is the second and the third week of every month, because by that time the market would have settled. Towards the last week, towards the first week is volatile. There are more opportunities because that time the market, you'll be having those spikes and swings, but you will not be having the normal consistency, stability you would see in the market. So sometimes your setups may be correct, but there will be a spike that will just take you off and hit your stop loss. So the same way you have your week beginning and ending, not best time, the same way you have it in the month. All right. Then, there are some people that are not even looking for all the opportunities in the market. Like they don't want to make all the money. They just want 5%. Some people trade like this. They just set the target for the month. So if, for instance, Williams wants just 5% in a month, all he does is he looks at second and third week and he would definitely get 5%. You understand? But I'm not saying we should limit ourselves to that, because at my level or Joni's level or Mike's level, we trade every day because we know what you're looking for in terms of, and understand this market is, you know, volatile, but we can trade. All right. Other things, but we can't say it all in one webinar, to be honest, you know, because there's so much to share. There's so much to say, but because I needed to answer the question on when is the best time in the month. If you are not that good, the best time is second and third week. But if you are very good, some of us that we wait for those times because we know that's when we are going to have more volatility. More volatility is more opportunity, however, more instability. So you must be able to manage the two because the market will be more spiky, so to speak. All right. Then if I would go ahead to answer again, what instrument should I trade? Have you thought of it? Because even during the day, there is an instrument that will move more than the other. So how do I know that? So what I do is I just go up, pick up an economic calendar and check. Of course, I always advise master an instrument, specialize in an instrument. So for me, my own instrument is NAS 100. If you wake me up from sleep, I will tell you where NAS 100 is going. I have mastered that instrument. It has become my instrument. All right. NAS 100 and gold, sorry. And they are related pairs. So for instance, if you pick NAS 100, pick up a NAS 100 chart and pick up an AUD USD chart, they are the same. All right. If you pick up gold chart, all right, and relate it a little, you will see some one or two instruments that, in case you don't want to trade the futures or the indices or the gold or the metal, you can pick a related major pair to trade it. All right. So it's good to specialize in an instrument. But at my level now, I'm no longer going to run away from any other instrument. All right. At my level, what I just do is I pick up the economic calendar of the week. Any one that has high impact news, if it is Euro news that is for the day, I know that something good is going to be happening with Euro that day, because what they use the economic calendar to do is just to spice up liquidity, to attract liquidity, and liquidity, you know, gives you the volume we are talking about. And where there's volume, sincerely, there is more opportunity. You can swim. It's like an ocean. You can swim. There's enough water to swim in. You understand? But when there's low volume, the water level will be low. You don't want to swim in a swimming pool that is shallow. You want to swim at least in a swimming pool that is at least 7 feet. Sorry, I'm a swimmer. Maybe for Mike, he's a gym person, but for me, I love swimming. You know, swimming is my thing. You know, swimming helps my brain to balance. So the same way you swim, you don't want to swim in a shallow pool because you can hit your head, you know, at the base if you are diving, you know, and all of that. So also is the market, really. You know, so you want to be trading in a market that has a lot good volume. So what I'm saying is check the calendar. If you are not, apart from the instrument that you are specialized in, you can take a trade again on the instrument for the day where the news is. So if it is Euro that has the news for that day, like on Thursday and Friday, you would notice that, especially on, I think it's on Thursday, Euro USD was the brainer because it had the liquidity. All right. So, but if my instrument that I like trading is not the instrument for the day, all I just check is how related is it to my instrument. There are days that NAS 100 will not move. Like on Thursday, NAS 100, was it Thursday on Wednesday, NAS 100 was just sleeping. There was a day of this week, it was sleeping because it had moved majorly on the day before.
They're asking, does he have a specific trading strategy? You do have a specific trading strategy, right? Like you use ICT concepts and stuff?
Yes, I do. I'm ICT.
So I'm ICT concepts.
I'm ICT 100%.
So I want you
even
guys,
in this, and in ICT, you say what?
No, go ahead, bro. Sorry to interrupt. Go ahead.
All right. I'm ICT. Now, the problem many people also have is plurality of concepts. To be honest with you, I've been doing this for how many years now? 2016. 2016 is, okay, that's about, it's not much, 6 years. All right. I've lost money in the market. Mike knows my story. I can't go back to that now. Maybe at some other time we'll talk about that. All right. I've traded volumes. There was a time I was handling a $500,000 account, my own money, not my own money, along with a partner. There was a time my funds were running up more than 500,000. Not company trading now. I'm talking of personal assets. All right. And I lost everything when I got out trading in 2018. Why? And this was the reason I lost. Inconsistency of strategy. How did I lose? I was trading a particular strategy. Then a friend called me during the week. Please, there's a BOT I found. The BOT is very good. The BOT is this. The BOT is that. And I did not test the BOT on demo. So he sold it to me for $1,000. I installed the BOT on my system on the $500,000 account. And the BOT started working well in the morning through to the night time. Then I went to sleep. By the time I woke up in the morning, I met a negative balance of minus $142,000. Why? The BOT malfunctioned. And then before I realized it, by the time I closed most of the trades, I was left with, I think, $3,000. That was the day I will never forget in my life. I broke down. I kind of slumped. I screamed. Thank God I was married. So my wife came. She carried me like a baby, stabilized me, and both of us started crying. Rest is history.
Wow, bro. That's crazy.
So I stopped trading for like about a year, like stopped serious fund trading. I was really psychologically bruised. So I just got back and started, I went back to education for like a year, reading, crying, trying to get my psychology back. And as I was polishing my skills again, revisiting ICT and everything that I was doing before that was working for me, before I met this negative person that brought the negative bad luck, I met Mike. Mike started in, I think, late last year, December or November, one of the two. I met Mike in another group. He's always talking faith. And he started talking to us every morning like this from January, if I'm correct.
Yeah, we went hard. We went hard.
We worked hard. So the law of nature again will play out. You reap what you sow. And we all sowed seeds of positive energy, positive attitude, meeting up every day. Like we were having this kind of conversations every day. Am I correct, Mike? Every day.
We were doing it every day.
Every day. Sometimes we have it 3 times in a day.
We're having fun. We're having a lot of fun.
We were, and you can see the results we are having in July already, Mike. You can see
it. It's reflecting, right? It's reflecting.
Reflecting. That's what I'm trying to say. It's what you give, you get. You understand? We were doing trainings like I can just come up. Mike would throw the floor open. People would share their thoughts. I think we need to go back there, really. It's just that the challenges are quite taskful. But I don't mind, even if it's once in a week like this, we need to have this kind of conversations, to be honest, to remind of ourselves of all of these kind of things, you know. And what was the question again? I don't want to, I think I'm deviating now. Sorry, let me just check it again. A specific strategy.
So good.
So so when I met Mike, he helped my psychology to come back. You can't lose that kind of money and be normal. I'm not talking of 10,000. I'm not talking of 100,000. I'm talking of close to $500,000 of personal money. I used to work in a financial bank in Africa. So I saved I worked there for 12 years. So you can imagine. So if I've worked 12 years in a corporate organization, I have a very great profile. Mike, I don't know if you've seen my CV. So I'm not singing my song. I'm just giving you a picture. So in my 8th year in the bank, I realized that these banks are thieves. These banks are evil. I understand that, sorry to say, but they are the formal sector is a fraud.
It is.
This whole banking thing we call banking is a fraud. You understand why? Because they are taking your money and they are trading with your money. You understand? And they are giving you loans from your money. They will give you a loan of, in Nigeria, it's even bad, 22%, and they will give you interest on that same money on your savings at 3%. So they are earning on a margin of 17%. That's a fraud. The banks are just thieves. So I was working in the bank. So when I realized that, I said, I will not do this again. I'm going to hang off the boots. All right. So what did I do? I gathered all my savings, made some deals here and there, and put it into Forex trading, because I knew the banks were simply doing Forex trading. Simply. All right. So story for another day. So what is my strategy? So when I go back, so I discovered that when you don't have a personal strategy, a singular strategy, when your eyes is not single, when you are prostituting between strategies, today you are doing supply and demand, from there you jump again, you say, let me do ICT, from there again, you jump again and say, let me do candlestick anatomy and candlestick patterns. From there again, you jump again and say, okay, let me do wave trading, Elliott wave. Then before you know it again, you move to harmonics. Then before you know it again, you say, no, I'm going to be using fib. Sincerely speaking, you are prostituting. Don't prostitute. Stay on a particular strategy and be consistent with it. So what I noticed was, so in the past 2 years, I settled for ICT. I ate ICT. I am ICT. There's nothing ICT you ask me that I can't tell you. All right. I became ICT. Along the line, I think about 2 months ago, I met Yomi. Yomi, I don't know if he hinted you, Mike. Yomi tried selling Nora strategy, the QM, QMC, QML. I don't know. You know Yomi now, Mike. So yeah. Yomi tried talking me into that strategy. It didn't work. By the time I tried it for a while, I enjoyed it. It was a good thing, beautiful knowledge. But I was now trying to marry it with ICT and start trading the two together. It does not. See, there's a law in nature again. There's a law that God has made provision for, that a double-minded man cannot receive anything. So it's always good to be singular-eyed, singular focused. So ICT is my strategy. Then within ICT, there is the source. Or sorry to say, there are some critical source that you must have. One of those sources I've given you this morning, this webinar, is time. There's another source, there are about 5 of them. We didn't even, not in the generality of ICT strategy. For those of us who trade ICT, there are some critical things that you must apply if you want to be an ICT guru. You must know. For instance, one of them is what we call the premium discount array. If you don't know that, you are not ICT. I can beat my chest. You are not ICT. Like you are not yet ICT. So when I'm talking about premium discount array, all right, that's a bucket. Because the market trades from premium to discount and from discount to premium. And there are about 7 arrays that you must pay attention to. So I'm giving you some of the source in case you need to go and read up or build up. All right. So you must know that in that PD array has 7 things that you must pay attention to. It's not just talking about I'm moving from premium to discount or from discount to premium. You must know 7 things within that array. And they must be at the tip of your fingers. All of us know them, but we don't know them the way I'm saying it. It is not in a checklist. You must have it as a checklist to be a guru, to be very sound in ICT. All right. So number 1 is this. If you look at the swing, I'm looking at your chart and I'm going to use it to explain the 7 of them. The first at the tip, let's take it from premium to, okay, this swing started from discount to premium. Am I correct? Where you have your imbalance. Good. So there's what we call old low / old high. That's tip, the week. No, you just put a line on the week. So for the 7 of them, that's the first thing. That's the first component of the premium discount array. No, the week beneath. So that line, you're like your support. All right. So you must note that one. The second thing is you must pay attention to is what they call rejection block. All right. So the rejection block is between that candle body, the last candle there, and that line you drew. That's your rejection block. So you can see the 2 candles formed something like a Twitter button. Mike, I'm sure you are a candle person, so you know what I'm talking about. Those last 2 candles, rejection block. The third part of the array is your other blocks. I'm
So
sure
your order block will be up top?
The block, no. The line, the first line there is like your horizontal line. Okay. Your old low and old high. You can see underneath the 2 blocks is your rejection block. Right. Then, of course, the normal way we draw, the other block is the body of the candle. That's the, yes. That's the third thing.
Order block. Yep. Which is the black candle, right? That would be the order block.
The right black candle, yes, that's your OB.
This is some key stuff, guys. He's saving you a lot of time. Like, you gotta go through videos of ICT and videos to learn what he's teaching you guys right now in like 30 minutes, you know?
Are you with me?
We appreciate you.
No problem. So the premium discount array is very important. The fourth part of that array, of course, is your imbalance, your fair value gap, or your and your liquidity void. The first is fair value gap. The next is your liquidity void.
Liquidity void?
Yeah, you know, liquidity void, your gap, fair value gap is what you captured now, but liquidity void is the whole space.
The whole, okay, so this whole block.
Yes, that whole space. You get the gist.
Okay. Okay.
So we mentioned how many now? There should be 7. 1, 2, 3, 4, 5.
Yeah, we talked about premium. We talked about discount, rejection block, order block, imbalance, liquidity pool. That's about, yeah.
Then we now have what we call the breaker block.
Breaker block.
All right. So
let me see if I can find it.
It's going to be by your left there. Yes, that way it broke it. Oh, beautiful. Mike, you are a guru. I'm enjoying you. You captured it. Excellent. Then, of course, that line at the top of the breaker block, like there's going to be an horizontal line that will run through. All right. Okay. It's called your mitigation. So if you have those components, that's all you'll be looking for. Price will always react at this 7 points, not at the same time. It may be 2, it may be 3, it may be 4, but price will always go to any of these 7 places. So when market is moving from discount to premium, you now know where those candles will be visiting. Either they are visiting another block, or they are visiting an fair value gap, or they are trying to fill a void, or they are going to be touching a breaker, or they are going to be touching a mitigation. Do you understand? So those are 7 areas in your discount area or in your premium area that you'll be paying attention to. So it is called premium discount array. That's one of the source.
Premium
So for
discount
instance,
array. Wow, that's a new one.
that's what it's called, this premium discount array. So if you see price moving from a discount area, that is this swing now, 50% down is your discount, 50% up is your premium. Beautiful. So when 50% has been, so when price starts moving from another block at the discount area, you'll be targeting any of these 7 places in the premium that price will be going to. So if Mike is buying at the discount, his target point will be price, will be expecting price to get to any of these 7 areas to react, to respond. So that would be your take profit areas. All right. So I don't know if you guys feel me. I don't know if you understand what I'm saying. So those are the areas that you'll be paying attention to on your swing and on your chart. So that's one of the source.
So basically once once it breaks through the mitigation, right? It creates a new range. It's creating a new range. It's creating a new range. And the new range, you're gonna wait for like a sell maybe here, right? Like wait over here to come over here, try to sell it. Or if it comes below this area, like maybe down here, you're gonna try to buy it.
Yes. And for instance, you must also understand what we call, that's quite some information, but I just pray maybe another webinar will look at that, is you must understand what we call institutional order flow in terms of market structure, where market is going. Is it a bullish, bullish day or a bearish day? So when you are able to detect, or you're able to prognosticate where market is moving, is the market is it higher highs and of course higher lows, or lower lows and lower highs? You must understand the institutional order flow in terms of institutional order structure, in terms of, you look at your chart and you can say, this market structure is bullish, or this structure is bearish. That's the first thing. So when I now know that, for instance, the structure is bullish, all right, I am looking for the swing to come into the discount areas to give me bullish entries. So take note of what I just said. This is source. This is the source. So anytime price is visiting the discount area, any of these 7 arrays, I am looking at the candles. Would there be a form of rejection from that area, pushing it upwards? Because I know the structure is already a bearish structure. The structure is already a bullish structure. In a bearish structure, I am looking for premium arrays. In a bullish structure, I'm looking for discount arrays. If you can marry these 2 things, sincerely, I've given you ICT summarized. Because some people, sometimes you'll be wondering, why is this guy getting his trades so accurately? You understand? Why is he calling it like he's a ghost in the machine? Are you with me? That's what he calls himself now. And to be honest with you, it's just simply because he's a graduate of computer science. So what he said he did was that he understands programming, all right, and he knows that all these things works on computer algorithms, all right. So he knows what we call the algo. He just studied the algo and saw that, this is what happens every time and every day, all right. So that is source 2. There are 5 critical components I said you need to know. So the second source is to know your structure, institutional order flow structure. The first is premium discount array. The second is structure. Are we together? All right. There are 3 others that I will just mention. You can go and look for it. Maybe we can do another webinar another time, but
sure. I think that's a lot of information for one night, straight up.
One night. Yes.
Like they need to actually go and start watching the ICT videos.
Yes.
And like get more informed. Like, because what you went through is a lot, especially if it's the first time that you hear this,
It's a
But
lot.
you gave them the sauce, dude. You gave them the sauce. You gave them the sauce. Like that's it. That's the strategy, guys. Like basically,
there are 3 other things, but with these 2, start with these 2. That's the starting point.
Wow.
The others are to complement what you're just going to be doing. Sincerely, there are 3 other things, but start with these 2. You know, so it's a journey, really. Don't be too in a hurry to jump the process. It's a process that you must go through and you must learn from. And finally, and final words from me is that all your negative experiences, please don't give up. I beg you, don't give up. I'm still trying to recover from my own, but Mike knows that the money will start coming for us. Am I correct, Mike? Mike knows where we are now. We are at the critical juncture of a breakthrough. We're about to boom.
We're so close, bro. We're so close.
We are so close.
We're so
close. If Mike started trading 2018, I started trading 2016, and we've lost money. Mike, I don't know, Mike has lost money too.
Hundreds of thousands.
Hundreds of thousands. So it's not going to be a journey that will be roller coaster. No, you will go through it. But where I am now is, to be honest with you, is fulfillment. It's more than money, because now I can say that the skill is I have acquired it. All I only do is keep polishing it, like you are polishing your shoes. All right. Now, when you have that skill, there's a sense of fulfillment that comes to your mind, because you know that any market, and I'm not talking just Forex, any market, you can go into any market and analyze any chart and you'll be very good. Crypto, index, futures, stocks, call it any market, you'll be able to handle it. Because if you learned from trading Forex market, because Forex market is one of the most difficult markets to trade. Crypto is easy. And I'm not blabbing, I'm telling you the truth. Crypto is easy. You understand? We're doing crypto. Crypto is easier than Forex. The only problem with crypto is that it's volatile. Like, you can just have a dump and you can just have a rise, but it's easier to trade. You don't need to wait for time of day, all these things I'm talking about. You don't need that stress. News, there's nothing like news in crypto. There's nothing like NFP in crypto. There's nothing like, crypto is easier. But if you can be a Forex trader, you can handle any instrument, any market. You'll be proud of yourself. And it takes pain to gain, you know. So in passing, don't give up, because 1 year of profitability, when you get there, can make up for 10 years of losses. I repeat,
that's facts.
1 year of profitability can make up for 10 years of losses. It can also make up for 10 times.
Yo, as soon as you said that we took some L's, people left the call. They scared. You can't be scared, man. Like, you guys are gonna lose. Like, you can't. There's no way around losing. You're gonna lose. You're gonna lose. Like, straight up. Like, whatever the mentorships tell you, if they're lying, you're gonna lose, and you gotta embrace it. You gotta embrace those losses.
You're going to lose because you're trying to gain mastery. And in gaining mastery, you will make mistakes. The athlete that's the best in the world, 100-meter dash, the boxer that is the best in the world, they did not just get there. The same way it applies to Forex. It's a journey. You understand? You cannot just become a doctor. You have to write exams. You have to go through it, and you must be prepared for it. So all we are just trying to do this hour of webinar is just to let you know what you're in for and let you know the game. I wish they know the game. Maybe you don't understand. There are people that just get into the market and every day they are picking $10,000 because they have arrived. They've gotten to that point where they've gained mastery. There's nothing like gaining mastery. There's nothing like sharpening the skill to the extent that you are now a sniper. You understand? You know what to do at every point in time. You know when to walk away. You know when to trade. You know, it's a skill. It's a skill. It's like going to the university to acquire a degree, you know, but it's fun when you are there. I can tell you. You can communicate effectively. There are graduates of finance that cannot talk about the market. I'm not missing words. There are people who studied all the theories in the world and they cannot trade the market because they don't have the psychology. So we have gone through it, Mike, and our psychology is now blessed and we are still working on it. See the way you were talking to those guys, our friends in the group, when we were in our inner circle. I loved it. When you were asking about one lot, did you see it? Because you have been there, you know what it can do to the account if you try to misbehave in terms of account and risk management. You understand? I was so excited when I saw that chart because you've gone through it. You know what losses can do, and that's why people don't pass challenges, because they are not that disciplined. You understand? When it comes to challenges, you must play by the rules. I disobeyed the rule only once this year on NFP. I said I will no longer trade NFP, and I went to trade it and the law, and I lost because the law will always, respond. When you have your principles, you've laid down your rules, you've formed it and formulated it into a law, all right, personal law, and you break it, you'll pay for it. Thank you very much. Thanks for your time.
To touch on what he just said, guys. Basically, what he's trying to tell you guys, you gotta develop the skill set. Develop the skill set. Train your mind to be a good trader, a professional trader. I got one more video that I'm gonna drop for you guys in the chat. Thank you, Williams. That's amazing. That's some good stuff. But the last video I want to share with you guys is called Trade Like a Pro. Trade like a professional. This one is by this one's super key. One of my mentors showed it to me. Let me see if I could find it. Where is it? Trading like a pro. Where is it? Let me find it. I'm gonna find it. Trade like a pro.
Hello, trade pros. In our last survey of the community,
there's one video that's super key, guys, that I want to share with you guys. He basically talks about how that there's three types of traders. There's three types of traders. One trader is brand new. You got the brand new trader. Wow, where is it? What's that guy's name? What's his name?
Is it don't trade? Don't show me your indicators. Is it that guy that gave you that?
Trading like a pro. What's his name? I'm trying to remember his name. This guy right here, Mark Douglas. Boom.
Douglas, yes.
Yeah.
what if in the next third?
This is the video you guys need to watch. It's all about like trading psychology, right? Trading psychology, which is what Williams is touching on. You guys need to actually more homework, right? More homework, but it's important. Like it's a long weekend. If I was you guys, I will watch all the ICT videos. I will watch this and watch that, right? But just to keep this long story short from that video, he says there's three types of traders. Do anyone know some good meditation tips? Meditation tips. Bro, meditation is all about breathing. You have to breathe. Like you have to breathe. You gotta find like hopefully like in nature, in the beach, or you could do it at home too, play some cool music in the background. And when it comes to meditation, you basically just gotta like calm yourself down. It's all about breathing, controlling your breathing. At the end of the day, you could control everything with your breathing. If there's a lot of stuff going on around you and you take a deep breath, it calms you down. Breathing will calm you down. That's why people that they're stressed out, they gotta go smoke a cigarette, but they don't know that they're getting calmed down is because they're smoking. Like when they breathe, you're releasing all that tension. It has to do with tension. Personally, like I would look into like Kundalini. This guy's like, you want to really have like a spiritual awakening, learn about like the Kundalini, bro. Kundalini awakening. Like that's about aligning your chakras. It's a whole nother topic, but I guess it does reflect into trading, because if you come with that mentality, you're gonna actually like kill the market. Kundalini energy. So learn about this, like how to awaken your chakras, Kundalini energy. Like this is key stuff. This is like ancient knowledge that they don't teach us in school. They don't want you to freaking know how to control your energy and your levels and how to master yourself. It's all about self-mastery at the end of the day. Can you send me the link to the Telegram? For sure. This is important. It's going to help you. Like if you're into like meditation and stuff, this is like the sauce right here for Kundalini. Figure like align your chakras. Because if one of your chakras is disaligned, like for example, if you had a heartbreak, right? You had a heartbreak, and so your heart chakra is vibrating at a different frequency than your brain. Now you have your crown chakra. You have your crown chakra thinking all this stuff. You have your heart all over the place. So your vibrational field is all over the place. You don't even know, but your vibrational field is all over the place, right? So you have to be aligned. You got to try to get aligned. That's like I want to touch on another little topic that has nothing to do with trading, but has to do with that. The reason like the porn industry is free, right? The porn industry, and they're constantly bombarding you with sex this, sex that, everything has to do with sex, is because they're trying to take your energy away. If you look at this picture over here, if you look at this picture right here for the chakras, you have your root chakra, right? You have your root chakra, which is down here, right? You have your root chakra. That's the first one you have to align. And how you gonna align that? You actually have to abstain from sex. You have to abstain from busting nuts straight up. You have to like you gotta like learn how to control that urge, because right there, that if you're constantly seeking for sex, you're constantly seeking for like love and affection, that means you're disaligned. Your alignment is not there. You need to align yourself in at that level. Like personally me, I went when I started like doing this, I went like 3 months tops, right? Like I couldn't last no more, but I did 3 months. And like you could, it was, and I would see like the reflection in my gym, in the way I was carrying myself, the energy I had, just because I was, that's called sacred energy. All that energy you have down there is sacred. And if you learn to breathe and like bring that energy up to your crown chakra, you actually start healing yourself. You're going to start healing yourself, because that's the most powerful energy you have. That's just something that I learned about that I'm willing to show you guys. but in reality, I want to talk about what the trading like a pro is, right? So there's 3 types of traders, right? I'll make it quick. 3 types of traders, guys. So you have trader number 1, trader number 2, and trader number 3. Trader number 1, you could say he's like new to the game. He's new to the game. So when he trades, like his account looks like this. Like it looks like that. Like he's always on a negative, like on a downtrend, like he goes up a little bit and downtrend, right? Like he's learning how to trade. Like he's not really getting any results. He's like in a big consolidation. And he probably blew his account multiple times, right? That's the number 1. Then you have trader number 2. Trader number 2, he learned some concepts, he learned some strategies. He's actually getting better, right? So trader number 2, he goes on a little bit bullish run. He goes bullish, but then something happens. He has like a breakdown, starts revenge trading, and he blows his account, right? Or like he'll try again. Okay, I'm going bullish, and then again something happens. Risk management, mental breakdown. Boom, blows his account. He calls him like a, what is it, like hit and bust or something like that. You gotta watch the video. I'm going from the top of my head. And then he has trader number 3, the professional, the professional trader. What does a professional trader do? He controls his losses. He knows he's going to lose. Professional traders, they look at trading as a percentage. 100%, right? They look at traders as a percentage. They know they're going to take some losses. They're aware of this. They actually know they're going to take some losses. They're aware of that. So they know their percentage, their win percentage ratio is 85%, 70%, like that's pretty good. 70%, 80%, that's pretty good. But a professional trader, he's always controlling his losses. What we were talking about earlier. So he's always on a bullish run, regardless if he's losing, because all his losses he's taken, they were calculated losses. He knows he's going to take losses. So if he takes 100 trades, he knows he's going to lose 3 trades out of 7, right? He's aware of this, and he knows how to control that. He's aware. He's aware. So that's the reason this whole class is fine. It's cool that we concluded with this, because we talked about mindset, we talked about strategy, we talked about a whole bunch of cool different topics, but at the end of the day, you have to pack down your risk management, because you could have the best strategy in the game, you could have the best mentors in the world, you could have like you could be blessed and surrounded by a bunch of angels that want to see you win, but if you never control your risk management, you're gonna keep blowing accounts. It's gonna keep happening. It's gonna keep happening. You're gonna go up, boom, you lost it. Why? Because you're not controlling your mind. You're not doing the proper risk management. You're just busting accounts. How many accounts are you gonna lose until you start actually trading like a pro? Trade like a pro. That's the conclusion of this webinar, guys. I want you guys to learn how to trade like a professional. And how you gonna learn how to trade like a professional? Controlling those losses. That's it. It's that simple. And that's something that I haven't mastered myself. I don't think I'm a professional trader whatsoever. I'm still somewhere here. I'm like between 2 and 3. I'm almost there. But lately, my risk management is getting better. My losses, they're like more control. I'm not blowing accounts. I used to blow accounts all the time. I'm not gonna lie. Why? The greed. Why? The anger. Why? The negative energy. Why? The everything plays into the game. Like what back to what everything that Williams was saying. If you're like having a bad emotional day and you go to the market, guess what's gonna happen? You're gonna be number 2. Why? Because you weren't controlling your emotions. If for example, you took a L, right? And then you started revenge trading, boom, you blew your account again. So at the end of the day, I think trading is really simple. We just overcomplicate it because we want to do it our own way, because the map is already there. The traders, the professional traders, they wrote the game for us. It's already written. All we have to do is apply the knowledge. Simple as that. And this webinar was actually really good, guys, because we talked about a lot of cool topics, guys. I hope you guys took some notes. I hope you guys learn from this. Whatever questions you guys have, the chat is always there. We're here to help. We're here to assist. We're here to level up together. Like I said, like Willis was saying, do not give up. I started trading 3.5 years ago. Out of 100 people that I met, there's only like 5 guys that still trade with me. Like it's like that. Like trading, people, like you guys got to remember, like you guys want to be millionaires. You guys want to be millionaires, and you want to have like all this amount of wealth, but you have to understand that in order to get to that level of success, you have to go through trials and tribulations. You're gonna go through tests, and like God is gonna test you. God is gonna constantly test you. I think it's the law of the universe, right? Like Mike, you lost your account the other day, right? Did you learn from that lesson? Did you learn? Right? So you go try again. But you didn't learn your lesson. You blew your account again. God wants you to win, but he also wants you to learn from your lessons. That's the key right there. You got to learn from your lessons. Whatever you guys been through, apply it. Yeah, thank you guys. I like you. I like the fact you guys hopped in the call. You guys are an amazing group. But yeah, learn from your lessons, guys. That's the biggest key. Do not give up, embrace your lessons, and keep going. You guys want to be millionaires? At the end of the day, you guys got to think about it like this. The average man, he goes to work every day from 9 to 5, right? They have no access to the financial markets. They don't know about crypto. They don't know about Forex. They don't know about the banks, what they're doing to he's putting all his money in his bank. Meanwhile, the bank is making hundreds of thousands of dollars with his money. But the average man, he's content. He's content, right? Because they sold him the dream. He's stuck in the matrix. He's stuck in the matrix, right? They sold him the dream to be like a sheep. I don't want to judge anybody, but they're practically sheep. You know, they got caught in the system. They're caught up in the system. You know, they're probably abusing drugs. They're doing alcohol every weekend. You know, they're just following through with the programming. Because at the end of the day, we've been programmed since birth. We've been programmed since birth, dude. Yeah, go ahead. The rat race. That's right. They're caught up in the rat race, in competition. You know, competition and ego. Oh, I'm better than you because this and that. Like emotions, like no self-control, guys. They have no self-control. They don't even know about Napoleon Hill. They don't know about Think and Grow Rich. They don't know about, you know, they know about all the movies in the world. They know all the Netflix shows. But ask them about like Think and Grow Rich. Have you read Think and Grow Rich? What is that? You know, like, you feel me? Like, we're blessed, guys. We have the knowledge. We have the knowledge, and God is giving it to us. If you guys are in this call, you're probably one of the chosen ones. You're probably a chosen one for sure. The fact that you're in this call on a Friday night at 1 a.m. while everybody's partying, right? Everybody right now, they're out partying. They're hanging out. They're drinking, smoking, having fun, celebrating. What are they celebrating? What are they celebrating? We're getting it. That's right. We're getting it. But what are they celebrating? They're not celebrating anything. They're just trying to escape the reality of things. I don't want to escape the reality of things, you know, because I'm unplugging myself from the matrix personally. The fact that I learned about all of this stuff, the fact that I'm aware of what's going on, and I'm pretty sure the rabbit hole goes real deep. I'm just scratching the surface, right? We could talk about this for like probably like a whole other hour about the matrix and the rat race and all this stuff. But I just want to conclude with the fact that you guys are here in this call. So you guys are the chosen ones, guys. You guys are the chosen ones. The fact that you're actually leveling up mentally. I don't know how old are you guys, but think about it like this. When we die, we're not going to take anything with us. We're not going to take nothing with us. So might as well go hard now, figure these things out, because nobody taught us this. My family, they're from the country in Colombia. Like my grandpa, he used to work at a farm, right? Like his dad used to beat him up every day. Like he told me stories, right? They were from farms, you know, they're like my family background. They never taught them about the financial markets. They never had access to this information. Imagine if my family would have had access to this information 4 or 5 generations ago. Where would I be right now? You know, you got to think about it like that. Think about it long term. You're trying to create a legacy. You're trying to create long-term success. But you are the one that was chosen for this mission. You were chosen for this mission. You know, God picked you. He picked you, and like he knows you're capable of doing this. He knows you're capable of doing this. But what God is funny because he likes to shake out the weak. You know, he's not going to give success to just everybody. He's going to shake out the weak. Like the people that are not meant to be here with us and they gave up, God shake them out. Yeah, they weren't worth his blessings. You know, they didn't want to learn their lessons. They gave up early. You know, they took a few L's. They came in with the wrong intentions. You come into the market with if you come to the market and you think you're going to become a millionaire from one day to the other, and you don't see success right away, most people, they rather go back to their work because they rather make some consistent money and be content. Me, I'm never going to be content, bro. I'm never going to be content. Why? Because God wants so much abundance for us. He wants a lot of abundance. He wants to actually to impact the whole world, the whole community, change the whole generational freaking from like 10, 20, 30, 50, 100 years, 200, 300 years from now. They're going to be speaking about you. Remember that guy? from like remember my grandpa? Yo, thanks to grandpa, we're set for life. That's a beautiful feeling, you know? And we're gonna go through some hard times too, you know, like look at everything that's going on, guys, worldwide. Like the corona was just the beginning. That was just the beginning. Now we got wars going on in Russia, Ukraine, China trying to invade Taiwan. Like there's gonna be more global conflicts. Watch, there's gonna be more global conflicts. There might be another pandemic. There might be another shutdown. God knows. But the fact that we have access to this information and we could work from home, what are the people, the regular people, gonna do when another shutdown comes for another 3-6 months or whatever? You think they're prepared for that? They're gonna wait for the stimulus check, probably, right? And what about the people all over the world that don't have access to the stimulus check, right? You know, like think about it like that, guys. We're preparing ourselves for a financial breakthrough, you know, and it's not gonna be easy. Nobody said this is not easy, guys. It's not easy, but it is possible. I've seen too many success stories already. I've seen people make millions of dollars already. So we're close. We're like right there. We're like knocking on the door right now, and God is about to open it for us. Like, here you go, guys. You guys made it. You know, you guys never gave up. So just keep grinding, family. Let's keep going, and we definitely got this. We definitely got this. Count on us for whatever you guys need. We actually want to create like a brotherhood, a family, people that like actually want to level up. We want to take you with us. We gonna make it. I know we're gonna make it. I know it. And deep in my heart, I know it. That's why I haven't quit. I'm never gonna quit. I know I'm gonna make it, guys. You gotta have that confidence, you know. And there's gonna be some tough days. Like this week. This week was rough. It was really rough, right? Like Monday, the US 30 bought, you know, all that stuff that happened. It was a lot of chaos, you know, a lot of turmoil. But I know this stuff is gonna keep happening. There's gonna be more stuff that's gonna happen that's gonna try to stop our growth, stop our process. We just gotta be mentally tough and learn from like our mistakes, you know. If personally me, I lose. Sometimes I lose my cool, right? Because I get pressure, and then I start going through anger, right? Anger turns on, and then I get aggressive and I start lashing out on people. I gotta fix that, you know. I gotta fix stuff like that. But I learned from my lessons, guys. Just keep learning, keep leveling up. Nobody's perfect, but self-mastery is the key, guys. I don't know. I could talk forever, but that's about it. Hope you guys like the call. Any questions before we hey Steve, do you want to drop some nuggets or what? That's another master trader we have in the squad, but I don't see his mic. I'm gonna stop the recording.